The Hedgeless Horseman here. In this video I'll talk briefly about LIO Metals and Snowline Gold. I own both of those, and LIO Metals is a banner sponsor. Again, I'm gonna keep harping on about this fact. When junior sentiment is this low, you should pretty much throw away the sell button, because there's a 90+% chance that whatever you're looking at is undervalued. And when sentiment inevitably swings, they're probably gonna go up a lot, regardless really of, they could almost put out no news and they would still go up a lot, most of them. And the best part is that there's a lot of growth stories that have actually created a lot of value while sentiment just kept getting down, and now we're at tax loss selling season. So right now we're at like peak pessimism, and there's incredible opportunities out there, best since the flash crash, I would say, especially given where price of gold is trading. And remember that last time sentiment in the juniors and valuations in juniors were like, at these levels or close to these levels, except, briefly here, that was the 2015-16 bottom. Gold was trading at 1,050 back then, and silver at $14. So it makes absolutely no sense. I mean, I bought this low, and I thought they were cheap. The business overall, the silver and gold sector, was shit back here. Nobody made money. The sector was actually worthless on paper. Right now, the sector is doing great, especially the gold sector. So just based on simple logic, if I thought they were cheap here and, provided good risk reward, now it's way, way better than this bottom. It's ridiculous, actually. But again, this is the age of Dogecoin, hamster coin, NFTs, nosebleed PE ratios in the overall stock market. So nothing makes sense right now, obviously, but that doesn't last forever. So our job is obviously to take advantage of the mistakes that Mr. Market is doing, and this is a big valuation mistake by Mr. Market, which will correct in the future. You can bet on that. So first up, LIO Metals, one of the most depressing charts out there, I would say. And what makes it even more depressing, and why it's getting better and better in terms of opportunity and risk reward, is that if you just looked at this, you would think that, okay, looks like LIO Metals haven't, been doing great because the stock is down. Some 60% from 52-week highs, or more than 52-week highs. Okay, but we're not supposed to be the average retail investor who just lets Mr. Market dictate things for us, right? I mean, our job is to take advantage of Mr. Market. So what do we have? Super depressed sentiment in juniors, tax loss selling season, and a lot of people are sitting on tax losses right now, paper losses in LIO, so that's gonna create even more artificial selling. And then just the fact that at surface it's been boring, yada yada yada, people are getting worn out. I would assume that like 90+% of people have that thought about selling, let's say, have pretty much sold out right now. So I think sellers are running out, and the best part is that the company, unlike what this chart suggests, has just kept on hitting additional high-grade results, new high-grade intercepts, adds numerous high-grade intercepts, additional high-grade intercept, additional high-grade intercepts. So I mean, this is why I love the junior mining sector. It's absolutely brain dead at times. So I would guesstimate that the actual value creation curve has gone something like this, maybe even higher actually. It's a fully permitted mine site. They have tens of millions in cash. they've been putting out high grade result after high grade result, and the market still refuses to reflect any of it. And like we've seen, which always happens, you have these oscillations, up, ups, downs, and this down is obviously, it's taken longer than this. It's actually retraced, I would guess, on par, let's say. So this has shook out so many, let's say, weak hands. So okay, unless the project gets, I don't know, nationalized or whatever, when sentiment in the juniors change and people dare to take risk, and once tax loss selling is behind us and they keep hitting these high grade results, what do you think, the market is going to do over the next 1-2 years or whatever? Would I be surprised to see something like that? This, of course not. It just makes sense because it has no business trading down here. It's ridiculous. It's a huge exploration potential, and they've just kept on hitting and growing the inferred metal endowment. So this is, like many juniors out there, this price action is pure bullshit, and hopefully again, this is a lot of tax loss selling, I think, which has been sitting on price. If this was not tax loss selling season, maybe the share price would have already started climbing. So you have this artificial selling pressure, which creates these enormous opportunities in a lot of juniors. And like you can see here, 2018, probably some tax loss selling here as well because the prices had declined. What followed was 562% ramp over the next 1.5 years. Would I be shocked to see again something on par with that? No, I would not, over the next 2.5 years. And in terms of risk reward, okay, what's the risk reward, or what's the downside potential? Obviously, it's undervalued already, and they have resources, etc. Things can go wrong. Don't get me wrong, but since they've actually added inferred ounces over the last 12 months, so implied value has been going up. So there's no drill results that can come out that would take away the resource they already have, and the permits are still there, etc. So like, I don't see, if fair value is around here right now, so you're obviously not overpaying for line 1 metals. And again, that doesn't mean nothing can go wrong. I'm just saying that, okay, fair value is around here right now. You're certainly not making a mistake. The only way you would be making a mistake is if fair value actually was below where it is. That's a real mistake. Buying something cheap, let's say it was already very cheap here and it goes down, that's not a mistake. That's just Mr. Market becoming increasingly stupid. So if the fair value is indeed up here, one would be buying all the way down, because the market will always swing from low sentiment and tax loss season to high sentiment. Look at some of these results. That's over 80 gram meters. This is pretty much 80 gram meters as well. Okay, and pretty big step outs actually. More high grades, some very narrow but super, bonanza grades. 20 grams over 7.5. Most juniors dream of getting results like this, and the market has not cared at all. So this is probably one of the most depressed stocks in terms of sentiment, which means that if the beach ball is incredibly pushed down I would not be surprised to see a big swing, because the value creation curve has been in fact going up, that is for sure, based on all news we have seen. So yeah, I wouldn't be surprised if LIO actually turned from, you know, one of the, let's say, worst performers to one of the best, even in a neutral gold market, let's say. If gold stayed flat for 1-2 years, I think LIO from here will outperform the sector on average big time. Then we have yeah, and of course, I mean, I'm not selling down here. I've actually bought some for especially some family portfolios, which are, you know, long-term hodl portfolios, because this is, I think, one of the best risk rewards out there. And again, when you can understand why it's low, you know, that's a good thing. Okay, obviously depressed sentiment and tax loss selling, so you can understand why it's cheap, because the results wouldn't suggest it should be cheap. Anyway, next up, Snowline Resources. This is, you know, one of those incredible growth stories, or potential growth stories. They have basically 3 what looks to be potential, you know, tier 2 to tier 1 targets. Einarsson is already a discovery. Rogue, they've hit visible gold over 100-meter intercept, and then they have the huge Ursa anomaly. So there's like 3 world-class exploration stories, you know, let's say world-class potential at least, in one company. Negative is that, you know, it's seasonal, obviously, but Yukon itself is a good jurisdiction. So just think about this. They've hit already at Einarsson in the Jupiter zone. They've hit. Let's see if I can find it. Maybe it isn't actually the most update. Okay, here's Jupiter. They've hit plus 100 gram meter hole, and they haven't. This was pretty much blind drilling. If you hit the 100 gram meter interval by doing like 700 meter step out holes, that is just ridiculous. And they hit visible gold up here. I think actually they put out the assays from this. I'm not sure. Anyway, regardless, this is so early stage still, and they've hit intercepts that 1 in every 100 juniors will ever put out, even if they drilled like 40,000 meters at whatever project they're trying to explore. So way above normal success already at Jupiter. And then Rogue. Huge land package. Nice soil sampling. Nice chip samples. And let's see if I can find that news release. Visible goals. Jupiter zone. Yeah, here's a row. Pretty big soil anomaly. Visible goal. First 2 holes ever drilled, again, like super early stage. Trace amounts of visible gold, which you can see here, or broad intervals. Let's see if it. Instances of visible gold are through 217 meter depth. It's just, there's no assays out yet. but it's just ridiculous. So they made, or at least at Jupiter, they hit way above average expectations of, early stage exploration campaign, way above. And then you get this at Rogue in the first 2 holes. And then you have the project that before the discoveries, the high-grade discovery at Jupiter and the visible gold in core at Rogue, this was the project that Quinton was most fond about, it sounded like, because this is a 18 kilometer plus trend with very high grade zinc and silver. So this is potentially, behemoth sized anomaly, which could obviously hide a behemoth sized target. So in Snowline you pretty much have three huge targets. One has already shown to have, they've hit way above average expectations in terms of early stage drilling success. So that, let's say, Jupiter has the potential to be, who knows? I mean, I'm talking potential here, 2 to 5 million ounces of episodal gold. Yeah, okay, what could that be worth? What could 50% of that be worth? Okay, well, a lot, obviously. Then you have Rogue on top of that. That, I think it shares similarities with like Fort Knox, huge gold mine in Alaska. Okay, what's the blue sky there? A lot, let's say $1 billion. And then you have Ursa on top of that. So, in my opinion, from a high risk, high reward growth story with a long runway, Snowline gold is almost unparalleled, especially given the valuation right now. So I mean, if Jupiter alone might be such a growth case that they could be drilling here for many seasons yet to come and put out high grade to bonanza grade results. Okay, obviously that's going to take the value of the company with it. Then you have Rogue with the 2 very long intercepts of visible gold. If that proves to be a similar story, first of all, they could do even more drilling, or they need to do even more drilling, which could last, keep this as a growth story even longer. And obviously the blue sky value, long-term blue sky value goes up even more. And then you have the Ursa project, which obviously would be way beyond overkill. I mean, Jupiter alone could be a company maker. Rogue alone could be a company maker. If both Rogue and Jupiter are company makers, and then you add Ursa on top of that, which, I mean, given the behemoth-sized anomaly, they have to test that. So it's like, if we're talking pure blue sky potential within a single junior, Snowline gold is probably in the top 3 that I am aware of. Negatives would be, it is still high risk, obviously. They don't have the margin of safety, but it's kind of diversified. It kind of has a diversified margin of safety, since they have so many targets, and they look so good at such an early stage. So balance of probabilities would suggest that there is something material both at Rogue and Jupiter already. And it's a seasonal play. The company just cashed up, great in my book. Not from a timing the sentiment part of things, but given that the share price has actually held up well, so it was great to raise, because otherwise we know how many of these stories work, that when the market starts sniffing out that there's the company needs to raise, it gets selling pressure. We've seen that in District Metals and a couple of other, high quality stories. The stock price just gets slammed because everyone is anticipating private placement. So I think they played it really good. And yeah, I think this story is one to watch, and this is one I think one could basically sit on their hands in for like 3 years. Totally forget about it. And I think if one went away on an island for 3 years, just came back, I think you would be sitting at a pretty good profit in Snowline. Obviously, what typically happens is that people are impatient, and 95% always trade. So if the share price goes something like this, people are gonna buy high, sell low, buy high, sell low, buy high, sell lows, and in the end they wouldn't have made much money. Unlike an investor that just bought here and rode the 100, let's say 50 to 100% up waves, and then rode the 50% corrections, and then rode the 50 to 100% up, and 30% down and 100% up, and yeah, you know what I mean. So this is, I wouldn't say foolproof. It's just that there's no news releases that's gonna come out in the short term that could break the case, because the results at this early stage are already so good that we basically know there's something there, and you shouldn't expect good results from such early stage exploration campaigns. So don't read much into poor results, but read a lot into good results. The earlier stage it is, the more impact good news, good drill news has, and the less impact bad drill news has. That's one thing to really keep in mind. Yet at sentiment lows, the market will do the opposite. It will not typically it will not revalue a good early stage as a result. I've seen that. I've seen companies make discoveries right around here, and the market doesn't care, even though the market should probably have it up like 50 to 80% after the initial hole, even if it's just a 50 gram per ton meter. So this is the kind of absurd opportunities you can find out there. Yeah, well, this became quite a rant, but again, it's like, if people look for growth with extremely long runways and extreme potential, and again, there are absolutely no guarantees. It's just that I think the likely path for Snowline is upwards, and if that's true, it's going to go up. It's going to keep growing for years to come, I think. Consider me biased. I own both stories, obviously. I think both are pretty much no-brainers from risk-reward. This one has the exploration potential advantage relative to line 1, but line 1 has absurd exploration potential as well, because they've only drilled a postage stamp in the Navilava caldera, and you get a permitted mine site with a high-grade resource already. So obviously margin of safety is higher here, worse jurisdiction though. Yeah, thanks for listening.